following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's the first day of winter, folks. 11-something this morning. Pretty amazing. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 90. Nasdaq is up 16. S&Ps are up 11.5. Percentage-wise out here, what you have the Dow Industrials up 0.4%. S&Ps up 0.4. Nasdaq up 0.2. Gold contracts trading flat at a price point, where is she? $12.70 an ounce. We have silver at $16.19 an ounce. Let's go over to the gold contract. We take a look at gold as we're coming into the Christmas weekend. Gold right now, folks, up $1.20. You're at $12.70. It's trying to make its way inside the higher range, which is $12.73. Now, I expect we're going to get in there. More than likely, we're going to actually get in there maybe tomorrow. You know, most times on a Friday, you're going to get high volatility in these markets, in the gold markets, in the metals market. Reason being is that you don't, they stop trading in the U.S. and in the world, actually. Pit trading at 1:30 on a Friday, doesn't open back up until Australia at 6:30, 7 o'clock at night, Sunday night. In this particular case, well, guess what? You're pushing it a whole nother day of liquidity. So it looks to me like you're laying right against the lower part of the higher range, and I expect we're going to basically make a run for that, more than likely coming into tomorrow. So it's going to be interesting watching this whole thing shake out tomorrow. Notes and bonds, you have the 10-year note up 2 ticks. 123.16, 30-year bond up 19 ticks, 150.105. Now, both notes and bonds, what they've done is this. They came down the last 2 days. They had wide price spread. They had volume on the way down. That being said, now let me show you something here, because this gets really intriguing in the aspect of will rates actually go up and stay up. So, if we take a look at the continuous contract, what you're looking at is this. The continuous contract broke out its lows on Tuesday and did it with conviction, that's for sure. There it is. Okay. I'm trying to get this continuous contract up here. Here we go. So I got the continuous contract. We broke out the lows with conviction. That being said, we're still in the same consolidation that we've been in since 2008. Now, the bottom of this consolidation is 122.24. That's not far. The number to keep your eye on is that basically, let's say 123. We got down to 123.12. Yep, we'll see. If they can't break 123, guess what? You still are going to get lower yields, higher price. Right now, the 10-year is trading at 2.481. And if we take a look at that for the year, that is on the high side of the year, 2.626. Was the high for the year. 30-year, we take a look at the 30-year. What we have with the 30-year bond. 30-year bond is stronger. then the 10-year, and quite a way too, actually. If we go take a look at this and we put this on the continuous contract, what you're going to see is that you're a long way away from your lowest swing point. Your lowest swing point is 147, and thus far, the lows that were established out here is 150.14. So if you get a rejection right here, bottom line, we'll see how we kick into the end of the year, meaning next week, and next year. King dollar. What do we have with King dollar? Okay, so King dollar still having a hard time holding price. We're at 93.840 right now. You have two separate swing points. You have the swing point that was established out here on the 27th of November, which is laying out at 92.130. Then you have the one September 8th. September, is it 8th? Yeah, September 8th, as 90.680. The way King dollar continues to trade, folks, it looks to me like, number one, it's going to go after the larger C point of a potential ABC structure on the way down. So this is what you have. First week of January, the King dollar hits a high, 103. It goes one way, down. We hit a low at 90.90 in September. You do a counter trend bounce. Now, this isn't one of the weakest bounces that you can get to. If you just want to see Fibonacci-wise what type of a bounce you did, you didn't even make a 0.382 bounce. That is not even a dead cat bounce. So you can have a very large ABC structure on the way down. If that's what you got, when we bring this all the way over here, what you're looking at is you're looking at about $83. If we get an $83, evidently, bottom line, when rates go up, your dollar would be going up, not going down. So when I look at the dollar and actually look at the bond market, it's saying to me, you got to prove it. And right now, guess what? It can't prove, the bonds can't prove that they want to go down. The dollar can't prove that it wants to go up. When you take a look at both of them together, and then on top of that, metals look like they want to go up. When you start tying those things together, bottom line, interest rates are going to stay low. Dollar wants to go lower. Bonds want to go high. Metals want to go higher. Now you got to figure out why. And that is going to be the loaded question. Because I suspect the loaded question is going to be, we have the tax cut that's in. That's passed. That's going to be law at the beginning of the year. And the real question is that the deficit going to go through the moon? And is that why the dollar's going down? We'll find out. Large deficits basically get weak dollars, weak currencies, period. Now, a weak currency, of course, what that weak currency does do is that it puts the aspect of manufacturing up. Now, I'm going to throw a real wrench in all of this. Why? So watch this. Okay, so the Canadian dollar came down today, but the peso, even with our dollar going down, that was also getting weaker. It's going to be a nice trading year next year, folks, because there's a lot of moving pieces. There'll be a lot of companies that basically should do pretty good in this, and there's probably a few companies that aren't going to do too good, or not get the acceleration that the market may think they're going to get. You stay right there, folks. We'll come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 81. You get the Nasdaq up 11. S&Ps are up 9.5. Let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. And don't forget, folks, Andy's got a great show right here at TFNN, 5 to 6 Eastern Standard Time every Tuesday, Thursday. Andy's also got a couple great newsletters. As you come over to our website at TFNN, you are going to see right on the front page. You go right down, Andy Hecht subscriber service special. You can test drive either one of Andy's newsletters. He has a daily newsletter, which is called the Daily Essentials. He has a weekly, which is the Technomental Commodity Report. As you test drive either one of those letters, or both of them, bottom line, nice way to kick off the year, you are going to get yourself a heck of a lesson. And what the lesson is the 12 essential lessons of trading commodities. That is going to be free as long as you are on either one of those letters. So check it out on the front page of TFNN. Andy Hecht, what's going on? I can see you. I just can't hear you. There we go.
You can't hear me?
I got
you.
I got you.
You got me. How are you?
I'm doing great, man. Yourself?
Good, good. Very cold here, man. Very cold in Vegas. 30 degrees last night.
It's 85 here today.
My God, I should be down there.
It's gorgeous, man. It's crazy.
Listen, I want to take this opportunity to wish you a Merry Christmas, a Happy New Year, because I'll be off next week. So just want to wish everyone a happy holiday. Want to let you know also that today on my show, I'm going to be doing kind of a recap of what's happening in commodities this year.
Okay.
You know, comparing the prices to the end of last year and kind of looking forward to 2018. Just some of the highlights. You know, we're going out on the highs in palladium, in copper, in crude oil. You know, and these are in lumber. These are important commodities that have established really good bullish trends. You know, actually since the beginning of 2016.
Yes.
And I'm thinking a lot about inflation these days. And I think that the tax deal is inflationary. I think what we're seeing in Bitcoin is inflationary. I think when I go to the supermarket, things are inflationary. I think that educational and health costs are inflationary. And I think that the Fed, the ECB, They're just not putting it in their formulas the right way. They're not cooking this soup with the right ingredients.
Well,
and I think they might be in for a rude awakening next year.
Well, I guess, if we stay with the tax bill for a second, what very well could happen there is that when inflation gets going, folks, it gets going when it gets in wages. And that's where that could start. Do you know what I'm saying?
Yes,
because
absolutely.
the workers are going to have a right to basically scream and yell,
Yes.
There's no doubt. When the breakdown on that Wells Fargo deal this morning, it was kind of interesting because the workers are getting a raise, but the reality is that they're getting 2 pennies out of every dollar that Wells Fargo is getting back this year. So
Right. The shareholders are getting the big raise. No question. The corporate getting the big raise,
But-
and the management will get big raises. But also I heard you talking about the dollar.
Yes.
In the last segment, and I think that it's the euro that holds the key to the dollar, and a lot of the dollar weakness you're seeing here is because the ECB cannot hold rates at negative 40 basis points in this global environment. They're going to go up next year. Also, we're going to see, especially if we start getting a whiff of inflation in the global economy, you're also going to see the tapering and the ending of QE in Europe, and that could force the euro up to 130. And we know that that's 60% of the dollar index, and I think that's really one of the major issues weighing on the dollar here.
no, I can see that. Oh, I can
That's
definitely
very
see that.
bullish for commodity prices, Tom.
Oh, listen, the thing that I guess at some point everyone's going to have to stop, basically pushing money into the marketplace. The way that it seems that between the bonds and the dollar right now, though, it's like, okay, it doesn't look like Europe's going to basically stop at this point. Right now, that's how it seems anyway.
Right.
Because our rates are close to the high of the year, but guess what? The dollar's close to the low of the year.
Yes.
You
Yes,
know?
and I think that, listen, dollar looks at interest rate differentials and it looks forward.
Right.
And if the ECB starts to act a little quicker in 2018, and that's what the dollar is telling us they're going to do.
Right.
So we'll see how that all shakes out.
No,
Let's
that's a
take
good point, man. That's a good point. No doubt, man.
Let's take a little look at crude oil here, because those oil stocks are ending the year bullishly. Oil's had a nice period of consolidation here after trading to the highs at the end of November.
Yeah, the XLE broke out.
And I like these oil stocks going into next year. I also like what I'm seeing in copper. Copper looks like it's going to, copper's been a freight train on the way up since it had that big, remember we had that big down day at the beginning of December?
Yes.
We went from like 310 to 294, like an elevator shaft. And look at it. It's been up almost every single day since.
Yep. No,
I think copper's going to end. Copper looks good because it's got supply issues. The Chinese smelters are going down because of pollution.
Yeah.
And it's got demand issues because of a growing global economy. So if you're looking at copper could be the harbinger for other commodities coming into the new year. Copper and oil are telling us, hey, we're going in on bullish footing into 2018. Also, I think that you're right about gold and silver. We could see some active markets tomorrow because they're going to close down, for a long weekend.
Right.
And we could see some pre-weekend buying over there in gold and in silver and even in platinum, which has recovered nicely. And look at palladium, Tom, another new high today. 1031 on the March contract, steaming its way towards 1090, which is the all-time high for that metal.
Unreal. That's crazy.
So lots of action, lots of things to look forward to next year. Keep agriculture on your radar, because each year is a new adventure in these markets. And the one thing that's consistent is that population is going up. And wealth in Asia is increasing, and that means that more complex proteins in the diet, that bodes well for the prices of grains. And when we look, grains and meats and those kinds of things, and when we look at this, we're at some cheap prices here, but the trends, the long-term trends are all higher. So the downside is limited in a lot of these markets, upside potentially explosive. In the soft commodities, we're seeing stuff like cocoa go out, on a negative note this year. Certainly coffee is going out on a negative note this year. So there are some bargains there. Sugar has been following oil because of the fact that Brazil is the biggest ethanol producer in the world, and they use sugarcane. So, that's zoomed back up because of the strength in oil that we're seeing. And the oil spreads, Tom, they're strong. The crack spreads, the heating oil, the distillate crack spreads, a lot stronger than last year at this time.
There's no doubt. The XLE, that broke out big. That's
right. Take a look at Valero. Put up a chart of Valero. That's going to tell you about crack spreads.
You stay right there, folks. Andy and I are going to be coming right back. And, of course, don't forget, Andy's got a great show every Tuesday, Thursday, 5 to 6. Get that program anywhere in the world, folks. Just go to TFNN.com, hit Tiger TV. Dow's up 87, Nasdaq's up 12, S&P's are up 10.5. Andy and I are coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 96. You get the Nasdaq trading up 14. S&Ps are up 11.5. We're talking about our man, Mr. Andy Heck. We are talking markets. We're talking commodities. And, regardless of how cold it gets, Andy, it looks like natural gas just doesn't care.
Natural gas does not care, and you know what? I mean, this is a long-suffering. This is tough. The number came out today at 182 BCF. The market was expecting like 175, and so even a bullish release was bearish for the number. So what's going on in natural gas? If we look at a weekly chart, we have an exact opposite December than last year.
Yeah.
Last year we moved straight up through December, reached a high at the end of the month. This month, we're moving straight down through December. I wonder if we're going to reach a low at the end of December to do like a kind of a mirror image of last year here. But this has been a very frustrating trade. Stocks are low, but the shorts are pushing it, and they're in control of the market here. No question.
Well, what's going to be intriguing is that, we've really actually been in this range since July of 2016, right? I mean, that's right. And if you break it, guess what? It's like, why can't they spike it? Gas is that crazy, right?
Oh, it's crazy. They could spike it either direction here, Tom. It's a very. The one thing I'll tell you about natural gas, historical volatility is at 49.5%.
Yeah.
And it's probably worthwhile buying options.
Okay.
Because and that means options are expensive here. This thing feels like a big move is coming. It feels like it's coming on the downside, but you know what? It's a very, very. It's not an easy one to call. This is probably the hardest market in the world to call.
No, I'm with you. It seems to me that the spike would be on the downside. The reason
it seems to me that way too.
The reason I'm saying that is that this is where it goes counterintuitive, folks. That it's freezing across the country right now. It's going to get colder over the weekend. And it had a bullish drawdown, but yet, so if you're a fundamentalist, it's like, okay, you want to buy it, right? Do you know what I mean? Because it's like, what, cold weather's going to all of a sudden not come? Well, no, it's already here. So
Right.
Yeah.
And you're going to have more, you're going to have a big drawdown next week and the week after. So, you know what? It's natural gas. Nothing would surprise me about this.
No doubt.
And usually, when you think it's going one way, it goes the other.
Right.
So,
exactly.
Very, very tough commodity.
So we got to go over to Bitcoin. Why not? Right.
Yeah, why not? Where is that now? Every time I look at it, it's a different. I wrote my technical commodity report yesterday, and I include I cover, because they are commodities. I cover Bitcoin and a lot of the other ones these days. And it's so funny when I'm writing the report. It takes me a long time. It's a very long report each week. When I write it in the morning, that section, and then at night before I'm ready to send it out, I look at it. The prices are totally different.
Oh yeah, well, it's gone down $4,000 in 4 days.
Oh, it's amazing. It's
so
shocking.
it hit today, folks. It hit 14,853. Right now we're at 15,178. Right. But it looks like once it got back inside 16,000, it's like 13,320 is game here. So it's going to be intriguing.
Yeah. Hey, but you know what? That asset class now, it's rotation. Look at Ripple. Ripple, 22 cents 3 weeks ago, $1.16 today.
Yeah, no, I can see it.
You have things going on there. Bitcoin Cash, massive move. Bitcoin Gold, massive move. Dash, IOTA, Ethereum. These are unbelievable moves to the upside. So even though Bitcoin has come down from the highs, the market cap of the asset class continues to go higher, Tom. And, as of yesterday, it was about 600 billion, 620 billion. I wouldn't be surprised by the end of the year it could be $1 trillion.
Okay, so now watch this. Now this is going to be so cool watching how this shakes out. So inside the new tax bill, right, folks, what has happened, and we've had many calls here, Andy, what happens is that the way that it seems like a lot of the callers, the way that they swap in and out, even in order to get their cash out, right, they'll go from like a Bitcoin to Ethereum to Litecoin to GDAC to get it out, okay? Now, what will happen, folks, come January 2nd or 3rd, when the law gets put into effect, you can do that, but if you get caught by the IRS, you're screwed. So watch this is what the change in the law is, right? Now, this is the tax bill. We're going to see little things come out like this, one on top of the other. I suspect that the Fed or the banks had something to do with this, Andy. Do you know what I'm saying? Mm-hmm. Because watch how this works, folks. Before, it's called a like-kind exchange, which is, you can do in real estate all the time. You're doing art. You can do just about, well, you used to be able to do just about anything. But they've specifically made it that you can't do it in the cryptocurrencies in this law. So what ends up happening is that as you take your Bitcoin and you swap them off for Ethereum, right? Guess what? That's the transaction. You're going to keep the transaction. You're going to find out what's going, and you have a new transaction. It's not a like-kind deal anymore. So when I read that this morning, I says, oh, man, that's going to be intriguing to see, I suspect most people aren't going to pay attention to it, right? Do you know what I mean?
Yeah. Right.
But it's going to make a difference on the larger players, for sure. Because
it's going to make a big difference. They'll know what they're doing. It's the smaller players who are going to get stuck.
Yeah, well, and yeah. It's going to be wild, man. And
it's going to be wild. I mean, listen. Eventually, the governments do not like this asset class.
No, that's why it's in there. That's the only reason I would say that. Because if anything, what's amazing to me about that is that when you it's the way the law is, folks. It's a like-kind exchange. If anything, a like-kind exchange from cryptocurrency to cryptocurrency would be a like-kind exchange, right? It's like, you're going from crypto to crypto. Well, guess what? No.
Right. No. You know what? It's so funny. Last year at this time, if we were talking about this, people would have said we were crazy.
Oh, I know.
Right?
We probably are crazy still talking about it. But you know what? You can't get away from it because it's there,
It's there, and it's moving, and nothing else is moving quite like it.
Right. Well,
and actually, in my lifetime, I've never seen any market move like this market.
Well, I mean, 98 to 97, even to 99, the equity markets were like that.
Well, yes
you were
and no.
probably in the futures market then. No.
The equity markets didn't go from 956 last year to 19,000.
Well,
that was insane.
Yeah, but I mean, remember, there was plenty of stocks that went from $5 to $200 in 5 months.
Yeah, like Ethereum, $8 at the end of last year, $800 right now.
Well, did you see Long Island Tea? You're going to love this. So this is really sick, folks, if you haven't heard this. Long Island Tea, that, they sell non-alcoholic iced beverages. That's amazing that they're even public. They only do like $1 million a quarter. It's like, I was looking at this like, you were kidding me. Anyway, they changed their name last night to Block. Let me get the name. To Long Blockchain, right? Andy, the stock went from $2 to $9.49, and it's still trading at $6.92. It closed.
This is out of control.
Oh, totally. It's their market cap. So check this out, folks. The market cap now, $67 million. $67 million, and they only take in $4 million a year.
Oh my God.
Yeah.
That's quite a multiple.
Oh my God. You stay right there, folks. Andy's going to be coming up 5 o'clock, hour and 20 minutes. Andy, thanks so much, man. Hey,
Merry
happy
Christmas,
Hanukkah. Happy New Year. Look forward to the show. Hour and 20 minutes.
2018, Tom.
Yeah.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Well, folks, cryptocurrencies is definitely here to stay now. You got Jamie Dimon. Jamie Dimon, of course, who said it was a fraud. Well, guess what? You get Goldman Sachs that is building a cryptocurrency trading desk. This just came across just as Andy and I were just getting off. Oh, man, you're going to love it. It totally makes sense, too, because what ends up happening, folks, is that at the beginning of any markets, that's when the most amount of money is made. That's when the most amount of spread is made. That's when the most of folks don't understand exactly what's happening inside any vehicle. So Goldman Sachs is setting up a trading desk to make markets in digital currencies such as Bitcoin. According to people with knowledge of the strategy, the bank aims to get the business running by the end of June, if not earlier. Two people said end of June. That might as well be a century. Everyone's going to jump on this thing. The move positions Goldman Sachs to become the first large Wall Street firm to make markets in cryptocurrencies, whose wild springs and surging values have captured the public's imagination but given pause to established institutions. Already, the bank is among just a few mainstream firms clearing a new breed of Bitcoin futures offered by the CBOE as well as the CME. Citigroup and Bank of America basically have been taking a back seat, waiting a see approach. Goldman has been assembling a team in New York. One of the people said, while the bank hasn't made a decision to where to house the desk, the possibility is that it will operate within the fixed income currency and commodity unit. Publicly, Chief Executive Officer Lloyd Blankfield has been circumspect. He tweeted in October that his firm was looking as to how to deal with Bitcoin. When the banks began clearing futures earlier this month, it demanded that some clients set aside funds equal to their trade. Bottom line, folks, you are going to see a lot of trading out there. Yeah, I mean, one of the targets saying, yeah, is Jamie Dimon going to fire them? Well, here, check this out. This is Jamie Dimon, I suspect, actually is probably turning his head a bit. The reason being, let me find this for you, because what also did come out today is that two of Jamie Dimon's analysts at JP Morgan did an analysis today on the Bitcoin volatility. So bottom line, it'll take him a while to loosen up a bit more, but I expect a bit more, that's pretty good, huh? But I expect that what you are going to see is that, guess what? If he let, and I can't picture two analysts that from JP Morgan writing about Bitcoin, the volatility, if it didn't go by his or their supervisors first. Yeah, so it's gonna be wild. And what does happen is this: what I saw earlier out here today too, and this is where this is probably coming from, folks. So picture when you're a large player in any market, meaning the bond market, the equity market, the debt market, what is totally non-transparent inside the banking structure are the derivatives that the banking community in general sells large players. And all the derivative is that you got all these very bright mathematicians that can turn around and they'll make a financial scheme up, and then they'll sell the scheme to the players. Well, this morning I saw in the Bloomberg that it didn't have what banks were doing it right now, but they were making very large derivative plays, setting them up in order to have Bitcoin billionaires hedge their bets. So this thing is out there. They know it's monster money. And then on top of that, what you do have is that the Winklevoss twins, they must be going out of their mind that the SEC, first off, didn't let them do the ETF. Secondly, they're taking so long because they're under appeal. Because what I did see earlier today is that ProShares is actually, they're going to be coming out with two ETFs. And one is going to be, 1-to-1 leverage, and another one's going to be 2-to-1 leverage inside the Bitcoin market. So there's going to be ETFs out here. When you cut to the chase, all it's going to be is a trading vehicle. That's what it comes down to. So it's the big casino, and inside the big casino, guess what? Trading Bitcoins are going to be out there. If you want to understand how these work with defined risk, a good way to do this is if you go over to Nadex. Let me get this up here. Let's see. Put it on that side. I got to get rid of. Where can I get this thing? Put this up because Nadex, folks. If you haven't test drove Nadex yet, you can come over to our website at TFNN. Hit the banner on the side. You'll see. You can open a demonstration account. What they have available is that they have, first off, they have all quotes that will cost you nothing. And you go on the left-hand side, you can hit cryptocurrency spreads. Then you're going to hit Bitcoin. They have weekly spreads. So this is live, number one. You can pull it up inside the demonstration account. You can see how these trade. And they start on a Sunday night, and they expire on Friday. Right now, let's see. So if we sold one, this is pretty cool. I mean, at the beginning of a Monday morning, what you had out here is that Monday morning, this was set up right in the middle of the spread. And the spread itself is a $15,000 spread. Yes, you heard that correct. $15,000 spread. The bottom of the spread is $11,400 for this week. The top of it is $26,400. Now, the way the spread gets set up, too, by the way, is this. It's a Sunday night at 6 o'clock. That's when the spread's going to start. Whatever Bitcoin is trading, they're going to go under that by 7,500. They're going to go over that by 7,500. And then what ends up happening, that's where the market starts. So if you sold it on Monday morning, I was looking at it Monday morning, you could sell it from about 750 to 800. If you had done that, it would have been a good trade. Right now, bottom line, you can buy it back for 386. So you would have made some good bread on it. As we're talking right now, you can see this is pretty cool. Bitcoin wants to go through the 15,000 level once again. That 15,000 level right now, and that 15,000 level, by the way, was an ABC structure on the way down. It broke out the low. Now that's a 1-to-1 ABC structure on the way down. Something you want to remember here, right? And this is where the bulls and the bears come in. Guess what? You think that 15,000 is going to hold? You can go on the other side of this. You can say, okay, I want to buy. And your maximum loss on a buy right now, this is where defined risk comes in. Your maximum loss on a buy would be 384. and the maximum gain's 1,100. Now, there's no way you're going to get a maximum gain. Well, I doubt you're going to get a maximum gain of 1,100. The reason I'm saying that is that what ends up happening is that would have to go up to $26,000. The cool thing is, come over to our website at TFNN, hit the banner. You can bring up the demo account, and you can see how these trade. Not only these trade, you can see how all the other defined option contracts trade. It's pretty cool. We go back over to the Dow for a second. Market again. Market's going to have a hard time holding price coming into the close. You have the Dow right now up 64. Nasdaq is up 3. S&Ps are up 7. Gold contracts catching the bid, man. Gold and silver, folks, coming into this holiday weekend, Christmas weekend. Looks to me tomorrow we're going to have some action. This gold and silver market want to move, man. They want to move higher. Stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 52. You get the Nasdaq flat. S&Ps are up 6. That's quite a little hit coming into the close here. Let's go take a look at the S&Ps first. After the close, too, we get the Nike coming out with numbers. Yeah, we just, when I started the program, 26.96. Yeah, you get 9 handles down from there. 26.87. What's game here, now that we get into that bar, you get game at 26.84. So, but then you also have game from the high volume low of yesterday. That high volume spike low of yesterday is game, you know, which is 26.74. We go take a look at the NQs, the Nasdaq the Nasdaq Futures. Nasdaq Futures out here. Oh, they're going. This is interesting. So, the Nasdaq Futures. So the Nasdaq Futures had the spike this morning at 64.82. Looks like they're going to go after that right now. We're at 64.89. We just hit 76, I think. No, 87. So 82 is game. What's also game out here, though, is that high spike from yesterday, too. Yesterday was 64.68. Inside the Dow Industrials, let's see what we have. So the Dow's given up just about everything. The Dow had hit a high of 24,850, just gave up 75 points coming into this close out here. After the close out here, we're going to have a lot of numbers coming out. Nike's going to be one of the big ones. That is going to come out at 4:15. Nike's trading $64.77. Pull this back a bit. Frontline, is that Frontline? I believe Frontline. Let me see if Frontline. Oh, that's Foot Locker. Yeah, Frontline came out with numbers. Foot Locker filling this gap. Ooh, that's dangerous. So Foot Locker's trading at $47.90. Let me see this. I know I saw something this morning. Oh, Finish Line. That's what it was. Finish Line. That was up a buck. FINH. You stay right there, folks. We'll be coming back with a bunch of numbers after the close. We have the Dow Industrials down up 48. Nasdaq is up 2. S&P's up 5.5. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Welcome to winter, folks. First day of winter. It's a beautiful thing. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Oh, yeah. Market-wise, let's take a look at it out here. We had the Dow Industrials up 55, Nasdaq up 4, S&P's up 7, gold contract trading up $1.50 at $12.71 an ounce. Silver, flat, $16.19 an ounce. Now, what you had in the markets, folks, is this. S&P, Nasdaq, Dow, all reached into their highs, sold off about half the amount they were up coming into the close, and this is like the third or fourth day that we've had it. You're in holiday trading, granted. There's no two ways about that. Bottom line, something we want to pay attention to, though, you know, what we had is this. We go over to the Dow. Dow, 24,876. That was on Monday. We get up to 24,850 today. You're at 24,782. So they sell it right into the close. We go take a look at the S&Ps. You're going to see the same type of setup inside the S&Ps out here. S&Ps got to a high today of 2696. We closed at 26. Well, we're not closed yet. We're going to close in another 6 minutes. We are at 2688 right now. The composite, the Nasdaq composite out here got to a high today of 69.92. We're at 69.65. The high, of course, was on Monday. Monday we hit that 7,003 mark. Gold contract. What do we do with the gold contract? Gold, I expect, folks, that we're going to have a heck of a day tomorrow. And the reason I'm saying that is that what we have had is this. The gold contract came off the lows and came off with some, came off with some good juice last week. You know, gold, that was on the 13th. 13th, we went from a price point of $12.42 to $12.59. You're at $12.71 right now, which is right under the higher range. So the higher range right now inside the gold market really starts about $12.73 to $12.75. Bottom line, I expect you're going to try to get its head inside of that tomorrow. So if we go over to the GDX and you take a look at the GDX, which are the gold equities, the Van Eck Trust, the gold equities today got its head inside the higher range. Right now we're at $22.63, $22.30 got it inside the range. So bottom line, that is saying the probability is pretty good that we're going to see the actual metal get inside that range. Now, notes and bonds. We go to the note market first. What do you have with the note market? Well, what you have with the note market is this. We actually rejected the lower price out here today. You had lighter volume. That being said, this note and bond market needs a lot more strength than we have thus far. Because what we did do is that Tuesday, Wednesday, you had wide price spread on the way down. You had volume on the way down. Now it has to prove itself once again that the note and bond market want higher price, lower yield. Right now, the 10-year is trading at 2.48. If we take a look at this and we look at this on a yearly basis, we're at the higher end of the year for the last 12 months. The low was 2.03%. The high was 2.6%. So you can see where we're at here. Now, we haven't broken any major swing points on the way down. What is amazing is that on the 30-year, we haven't broken a major swing point since 2000. And depending on where you've been the last 30 years, this is the longest bull market that I've ever seen. It's actually, it's been going on for 25 years. If I bring this back, what you're going to see, which is just amazing, is that let's see, can I get it back that far? I think I gotta do it the quarterly. Okay, so watch this. This is really cool, man. I was doing this morning. So the low in the bond market was September of 1981. 1981. A 30-year bond was $55. $55 you paid for a $100 bond that was paying 14.5%. So the bull market started there, and it didn't matter what bond you bought, folks, what 30-year bond you bought, from there all the way till the high thus far was September. September of this year, that very well could be the top. That's 177.11. Right now you're at 151. So you can see that was quite a market, or it still is quite a market, because thus far we haven't broken a major swing point on the way down. We haven't done that since 2000. King dollar, we get over to King dollar still wants lower price. It's pretty amazing. With rates going up, doesn't matter. King dollar still has sellers. You're at 92,845. I expect you're going to go after the swing point, which is a minor swing point from the 27th of November. That's 92,130. Your major swing here is September 8th. September 8th, 90.680 is the major swing point. And if, in fact, we break that, and if you have volume on the break, that would be a very large ABC structure on the way down that'll take you into the 88 area. Bitcoin had it all out here today. XBT, Bitcoin in the last 4 days has traded down $4,000. Right now we're at $15,069. We got as low today as $14,853. And what did get announced after the closeout here, it looks like Goldman Sachs, they are building a cryptocurrency trading desk. So you are having one of the best trading banks in the world. Bottom line, they're going to be building a trading desk. Bitcoin's not going away, folks. If we do look at the last couple trades inside the CBOE as well as the CME, the CBOE, the last trade in the futures market was 15,300. In the CME, it was 15,335. You can see what's happening is that the competition is getting tighter. And GBTC, if you want to see something that's really crazy, look at this. The trust, that trust just got whacked beyond belief out here today. So the Bitcoin trust, which we were talking about that we asked you never to buy, just went from 35,000 down to 17,000 in 3 days. 3 days. Stay right there, folks. We'll come right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 55. Nasdaq was up 4. S&Ps are up 6.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Now, don't forget, folks, Basil's got a great show right here at TFNN. Every trading day, noon to 1 Eastern Standard Time. He also has a great newsletter. He's the opening call. Now, the way that you can get this newsletter, you come over to our website at TFNN, and you're going to see, you go into newsletters. You're going to go into trading newsletters. You see the opening call right there. Let's see. There's newsletters right there. You're going to go into trading newsletters, opening call. You hit that. You can test drive his newsletter 30 days absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. And first off, happy Hanukkah. Have a great holiday. Thank you for all the gifts down here. Everyone's having a field day.
Good.
We appreciate it. Seriously, man. Seriously.
A little jogging over the next few days will get rid of that.
Oh, don't worry, man. Listen, man. Those things last me a long time, man. I go crazy. That's
great.
Yeah, totally.
Yeah, well, have Merry Christmas and really a Happy New Year, a wonderful year to everyone listening and to the whole crew at TFNN. Thank you for all you do.
No, thank you, man. So, what do we got? What are we looking at?
Okay. So there are a couple of things I thought I'd do. So the Dow right now has gone sideways since the day before the bill was passed.
Yeah.
And actually, it hasn't even been officially passed, hasn't been signed yet. At least it was passed by the House and the Senate. But now what we've got is something very interesting. The MACD on the left here is the daily chart of the Dow. In the middle is the weekly chart, and on the right is the monthly chart. And you can see this monthly chart is still looking very strong. And what's really important here is that if you work backwards, the technicals in the monthly, as I say, on balance volume, stochastic, MACD, 9-period moving average is way down at 22,677. We're at 24,782 right now. That's 2,100 points above. So what's really important for me at this particular stage is I think all the work has been done. Now we've got a rotation that's going on. The big question for me is if the Dow closes above, it's at 24,782. If it closes above 25,000 to 25,100.
Yeah.
I think that's going to be really important in my work. I just don't think, I think it's bumping to a lot of resistance here. But what I said, I gave that talk on Wednesday night to the Boston Investors Group and the Investors Business Daily Group meet up for the annual party.
Right.
I was the guest speaker. So I showed some of the charts and I said, let's not look at what can go right. Let's look at what as far as I'm concerned, what would I be looking at to say, now we've started the consolidation that everybody's been waiting for? And for me, it's real simple. If the Dow closes 2 out of 3 sessions underneath 24,400,
okay,
I think we've started both a daily and then perhaps even a weekly consolidation. So I'd rather be looking at the downside. So I did that through the different indices. But what's really fascinating is there's this rotation that just constantly goes on. It's been going on for 7 years. Every time one of the sectors gets kind of overbought
Yes.
like the semiconductors did,
Yeah.
then something else takes its place. So I've been focusing for a little while on the SLX, which is the Steel ETF. And you can see, look how strong it's been. They even broke out the last 2 days in the weekly chart, and the monthly chart is just bumping to 200-period exponential moving average resistance. But there's a very quiet. We've got a steel stock. We actually had two. Now we've got one, which is they're doing really well. And now they're getting a little bit toppy, but my suspicion is that it's telling us that the rotation aspect is alive and well. The banks, we still have a bank stock, but the XLF has just started to bump into resistance, and this is fascinating. There's the XLF, the S&P Financials oval pattern right here at 28.13. If it closes above 28.50s, that'll be really good. If it closes below 27.50, that's going to say, uh-oh, here as well, it needs a bit of a restive period. What's fascinating is that the bonds, you just spoke about them. Look at this. I'm going to show you a chart. I showed it to you a long time ago, and we couldn't believe it. I'm going to do it again. This is a 30-year chart. I'm going to have to squeeze everything of the TNX, the 10-year. I've got the same on the 30. It doesn't matter, but TNX is the most important because that's where mortgages and many of the interest rates are really focused on that. I'm going to squeeze this close. Here I go. Squeeze, 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 squeeze. I'm still squeezing. And look at this. We go back to, there was a high back in 1980. This is right here. So this is 84.
Okay.
Was a high in the TNX. It's at 139. Let's call it 140, but it's being smoothed out. So those numbers are just to give you a reference point because the numbers today are a little different. And now, look at this channel. It's been from that big pop-up that was the 1987 crash day, October the 19th high, back at 91. Since then, it's been in a down channel. It hasn't broken below and it hasn't broken above. But it is starting to test the resistance area. And if the 10-year yield actually breaks, it's at 2.481% right now.
Yes.
If it actually goes, I'm going to be a little bit conservative, make it a little higher than normal. If it can go to 3.2, that's very high. But I'm saying over a period of maybe 2 months or so, if it does break to the upside, that'll be the first break of this trend line. So you made a really good observation about the yields and what's going on. But what's really important as far as I'm concerned is that there's certain levels to watch. And this something else I spoke about. I actually spent about 15 or 20 minutes on it. I didn't intend to. I was just going to mention it in passing, is that Bitcoin. If you spoke about the GBTC, and I've mentioned this on my show just about every day, that this is a fund. And it is Bitcoin Investment Trust. In the time that it trades between 9:30 and about 4 o'clock in the afternoon, the period from 4 o'clock until the next day, 9:30, would be like a year's worth of trading in some stocks with the percentage moves. So this is just a vehicle that you can use maybe for reference, or if you get a really strong low in this, you could say, now I'm buying it before 5 days or 2 weeks, and then I'm out or whatever. But you can't treat it as a trading vehicle. It is impossible. But it gave a peak F top at 35.23, a round number high on the 19th of December. Today it's trading at 17. This is cut almost in half. Weekly chart, that's a peak F. This is in the chapter.
In 3 days, yeah, right.
Yeah, and look at this leg E in the weekly and an F in the monthly. I would be really careful. And I did this on my show today. I showed the Bitcoin 5-minute chart. There's a technique that we use. It's called the arch formation, and it gave an arch pattern, went to a peak E, and then there was an exact, if I put the crosshairs, I'm not sure you can see it, but if I put the crosshairs there, you can see the left side price movement from the low to the high was exactly the same to the right, and then it broke down underneath the very important support level. So you can use technical analysis, I believe, very, very nicely. But the speed is really, we're in a Ferrari right now. This is not your little Honda. Yeah,
hey, can we go back to, when we talk about E's, I saw when you had that, the Dow up. The Dow's in a monthly E, right?
Yeah, I thought you'd bring that up, yes. Now, this monthly E, let me show, this is one of the reasons why I've become somewhat cautious here, although we're still in very long positions.
Hey, just 1 second. Yeah, stay right there, folks. Basil and I are going to be coming right back. Our phone number is 877-927-6648. And don't forget, folks, every trading day right here, listen to Basil, 12 to 1 Eastern Standard Time. Go right on your cell phone. You go to TFNN.com. You hit Tiger TV. Basil and I are coming right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Basil Chapman. We're talking markets, and let's just go over to Nike first. Nike just come out with numbers, folks. Nike closed at $64.77. That's trading down 20 cents. And numbers on Nike go like this. They made their numbers. Earnings per share number estimate was 40 cents. They made 46. Bottom line, they beat, but guess what? The market basically is not giving them any credit right now, trading down 20 cents. We're talking right now the Dow. There we go. Okay, I see it, Basil. Cool.
Yes, good. So this is the very long-term picture. Well, not very. I can go much. I can go back to 1920s, but this is from 2009.
Okay.
And you can see what's really important to me. Excuse me, is this 9-period exponential moving average, this black line. And look how the Dow has held very well. Now it's pushing substantially above it. It's also above a very long-term trend line. And it's also broken. This is like what I call a left side, right side price time match. This long green line took the low, I believe, of 2009. And now we've gone 2 months further in time. And we've gone substantially higher than the, say, 22,000 level that we were looking at as just a time match. and we've gone to 24.78. So what I'm really looking at right this moment is the pattern that we spoke about is this stork leg formation. Essentially, what I identified a long time ago when I used to hand chart was that there was a particular pattern that kept going straight up. You couldn't believe it was going straight up, and then all of a sudden it stopped and it made this oval pattern, and then it would break to the upside. And then when it was finished, so then I decided that this looked like a leg. And you know how a stork stands on one leg and it's got this oval body? You wonder, how can it stand? But it does. And then it still has this long neck. So this is the pattern. So the difference between this Chapman wave stork leg formation and a pattern that I call the propeller shaft, where this becomes the fulcrum for the propeller blade down and the propeller blade up, is that if it goes beyond a certain point of a 1-to-1 in one of the key support levels, then you got to say, you know what? This particular pattern has changed a little bit. It could have the outcome, same outcome, but much, much later on. First, it has to have a pretty decent breakdown, and that would make the 22,677 level the support. So now it's got a kind of a combination between two patterns. The technical suggests this is still very strong, but we know how quickly things can actually break down. So that means the daily has to pull back, then the weekly, and then the monthly. But what's really important about this is that if we close December with this kind of candle, it's going to say to me, January, you've got to watch out, because you just mentioned, right, in the Chapman wave, it's when you get to D, E, and F, you've got to be really careful. Well, have a look at this. This is the S&P monthly, very long term. It's in a leg D. For the QQQ series, right here, monthly chart in a leg C, that's still very bullish. That doesn't mean to say it couldn't have a very sharp pullback. So that says to me, 2018, I think we're going to see one of the whippiest periods we've had in a long time. Doesn't say crash or anything, it just is really whippy. And I wouldn't be surprised if January starts that whippiness. That's just the way I'm thinking right now. And what's really important is to keep in mind, if you're in the right sector, you might be able to avoid any of the strains of the down move. And at the same time, I'm watching this whole dollar-gold relationship at this particular point, plus the bonds, because we might find something we discussed on Wednesday night. People brought up, what about inflation and gold? I said, that's going to be something to watch, both crude oil and gold. The Fed might find out of the blue, we got an inflationary period that, you know, once it's out of the box, inflation can get real mean. So that's something I think in 2018 we're going to have to start to watch. Plus, I'm sure you're going to talk about wage inflation, because all of a sudden with the tax bill, you might find that this might become a concern of the Fed. So it's going to be a really fascinating year.
You know, I think the wage inflation is probably going to be there, because it's going to be easy for workers to basically say, hey, man, I want some of that money. Just to give you an idea, folks, when Tommy had broken down the Wells Fargo deal this morning, so check this out. So Wells Fargo came out and said they're going to pay $15, you know, put money into training and all this. But the bottom line is that they are giving 2 cents out of every dollar. And you're talking about something like $270 billion.
Except they can make it sound like a big deal, you see.
Yeah, so I suspect that we're going to start seeing some real battles out here.
I think so.
Yeah.
I think so. So it's going to be a fascinating period, and we'll see what happens. And those are the levels that I'm watching, more the support levels that have to hold than the upside.
And, you know, folks, you can test drive Basil's newsletter. You come over to our website at TFNN, go to newsletters, go to trading newsletters. You see the opening call right there. Hit that button, test drive it 30 days, absolutely free. And, of course, every trading day right here, 12 to 1 Eastern Standard Time. Check out his program. Basil, thanks so much. You have a great one, safe one. Of course, I look forward to the show tomorrow.
Thank you very much, Tom.
Winter today. So, hey, what's Boston like? Is it winter or is it spring still?
Hey, you know, it's really not bad. It's cold, but it's not bad. We're getting a little snow tomorrow. You know, they can keep this up for me as long as they want.
Totally. Okay, man. Have a great one. Have a safe one.
Thank you, Tom.
Let's go over and take a look at Nike, folks. So Nike came out with numbers, made their numbers. You know, bottom line, Nike closed at $64.77. Right now, that's trading $64.55. Let's see what they have to say. Okay, so... I just got to get the right press release here. Let's see. Whoops, not that one. Oh, maybe. So let's see. This one will work. Okay, so this is for the quarter ending August 31st. Their earnings were 57 cents. That's down. I see. That's interesting. Down 22%, driven by gross margin decline. As previously announced, the company's alignment was created as a result of, let's see, what else? Revenue were $9.1 billion. That's up 2% on a currency-neutral basis, whatever that means. Gross margin did decline 1.8% to 43.7%. They're saying due primarily to exchange rate, foreign currency exchange rate. Selling and administrative expenses decreased by 1%. Demand expense was $855 million. Effective tax rate. So here's something pretty cool. So look at this for a second. So, you know, we know that we've had the aspect of the corporate tax rate, right? Now this is in Nike's release. Their effective tax rate was 11.4%, compared to 2.5% for the same period last year. Now watch this. Reflecting a tax benefit from stock-based compensation in the current period as a result of the adoption of Accounting Standards 2016-09. This is so look at this, folks. This is really cool, understanding, number one, what an effective tax rate is. So last year, their effective tax rate was 2.5%, this quarter. Now it's 11.4%. So you can see that the 35% was not even close. You stay right there, because we're going to be talking about the 35% as to effective tax rates versus what the tax rate actually was. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So what we're doing here, folks, this is just ironic, actually, that this is pretty cool that Nike come out with the numbers, number one, but inside of this explaining, many times when the numbers are coming out, folks, there's many press releases that you can grab simultaneously. In this particular case, the one that I actually grabbed was the official press release from Nike. What's so cool about this, though, inside of this is that, I've talked about many times that, listen, none of these corporations pay 35%. They never have, never will, all of the above. And right here, you can see that Nike is saying their effective tax rate this quarter was 11.4% versus 2.5% in the same period last year. So they're very good at getting these things down. Okay, so now this is where I'd like to go with this. So what happens is this is that where the work's going to have to get done as to what companies have actually been paying an effective tax rate that's higher than the 21%, and what companies have been basically paying lower, like Nike, right off the bat, saying that, hey, Nike's paying lower. They think that 11.4 is high, So there's going to be, and I don't know what the effective tax rate is of the Apples of the world. But that's something that I'm sure that analysts are digging into right now in a huge way. What I do know is that what is going to happen now is that Apple has 97% of their cash stashed overseas. What does happen in this new tax bill is that they can stash it wherever they want. They're still going to pay 14% on it. So bottom line, and they could, if they want to bring it back, they can bring it back. They don't want to bring it back, they don't have to bring it back. But guess what? They're going to pay the money on it anyway. So there's going to be a lot of different twists and turns inside this tax bill that are going to come out, and we'll find out what companies are going to make money on it, what companies are going to lose money on it. And if we go over to the aspect of Wells Fargo, for some reason, Wells Fargo, and I got to get this number. Tommy had the number this morning. Wells Fargo, inside the banks, is going to make the most amount of money. And I believe it probably has to do with the aspect of, this probably goes back to the 2008 level, where, if you remember, Wells Fargo, I guess, saddled with First Union, I think. I forget how many of the bankrupt banks that Wells Fargo actually got. But whatever is either on their balance sheet or not on their balance sheet, what will happen is that will help Wells Fargo the most. That's what it comes down to. Now, watch what also happens. This is where this is going to get intriguing right here, right now. No matter what the effective tax rate is, right? Let's say that your write-off situations actually go down dramatically too. So what ends up happening is that when you're in an aspect of 35% tax bracket as a C Corp, and you're expensing it in, bottom line is that you can basically write off, one for one. When we're back down to the 21% deal, which we're going to be on January 3rd, because the president's supposed to sign on January 2nd. What you're going to have there is that now there's going to be a lot of tax credits that can't get used. That's how this is going to shake out. So on the balance sheets of a lot of these companies are going to change. And so that's going to be, and what that will be, by the way, is that will be a write-off. So some of these numbers are going to actually, it'll be a non-cash write-off, but some of those numbers are going to probably look pretty bad in the first quarter because of that fact. So we'll see where the whole thing is going to shake out. Let's go take a look at some of the higher volume. Well, here, let's go take a look at the XLE. The XLE broke out today. So the XLE, and this is what kind of Basil was talking about as sector by sector by sector. Now the XLE has been weak all year. The high. Let's see if we go back to January. The XLE was at $76. By September, August it was 61. Today it had a big sign of strength. Today it took out its consolidation. And if we take a look at this, just on the short term, it looks like it's an ABC up. You get 62, approximately. You got about an 8-point ABC up, which is going to get you 74. Right now you're at 71.82. If I put this on a weekly, what's that going to just go for the high? Yeah. Well, 70. The high is actually 78 where we started from. It doesn't. Well, it can definitely go for that. 74 is the number, but the lower that high is 75. So I expect we are probably going to do that. If we take a look at the XLF, the financials, what you have with the financials thus far is that they broke topside 4 weeks ago. Haven't been able to do much since then. And if we do go look at the aspect of the bond market, because it's all going to be about bonds, folks. The bond market right now, the 10 years at 2.4. If we spread that out on the whole curve, this is where this is going to get intriguing. Will the curve flatten? So a 2-year note right now is paying 1.9. Let's call it 2%. A 5-year note is paying 2.2. A 10's paying 2.4. And a 30's paying 2.8. You can see the differential is not a lot. That curve is flattening out. It's like, okay, do you want money for 10 years and pay 2.4, almost 2.5, or do you want money for 30 years and you're paying 2.8? It would seem to me that if in fact, I would take the 30-year in a heartbeat. 0.3% for another 20 years. That totally makes sense, because if you're wrong in the aspect of it, you just refinance. If you're right in the aspect of it, you're going to want that money forever. And this is where we're going to be kind of in this bond market. We'll be we will be talking about in the next 2 or 3 months. Because what we have had is that the bond market has been in a bull market since January of 1981. You could buy any 30-year bond up till about 3 months ago, and you'd be in the money. That's how dramatic this has been. When we look at world rates, it's still saying that, guess what? They're going to stay low, but we'll find out. We're approaching the highs for the year right now in the 10-year. If we look at the high is 2.62. So we are very close to that. We're at 2.483 right now. As we come into tomorrow, though, in the weekend, it looks to me that bonds want higher price again. Metals want higher price. And it's about the dollar. The dollar wants to go south. The dollar has been going south. The high in the dollar was January 3rd of this year, 103. Right now, you're at 92. 90 is game. If you break 90, guess what? 83 is game. So we're going to get some volatility out here. We'll see what equities are moving versus not moving. If we go into the Toll Brothers, we take a look at Toll Brothers. That's kind of still hanging at highs. Lennar, the builders, what you got with Lennar? Lennar is going to break out again. Lennar is up $1.19 today, 63.75. That looks like it's going to overtake the 64 level. You stay right there, folks. We come right back. And, of course, don't forget, our man, Mr. Andy Heck's going to be coming up at 5 o'clock, 5 to 6. And, folks, if you haven't test drove us on YouTube yet, just go to YouTube. Pull up TFNN Corp and subscribe. It's free. All the programs will come right up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow, we had the Dow finish up 55, Nasdaq up 4, S&P's up 4.5. This, folks, more than likely what you're going to see, we did 779 million today in the NYSE. We take a look at the Nasdaq Composite, did 1.8 billion. What I do expect is that you're going to see the volume kind of die in the vine out here tomorrow, because what we have, of course, is coming into the Christmas weekend. Christmas is Monday. The following Monday is New Year's. You will get action, I suspect, probably next to Wednesday and Thursday, even maybe Tuesday. Tuesday will be a close one. The holiday trading is in right now, big time. What we will have, and this is where there'll be a lot of action inside the individual equities, is that there'll be a lot of analysts out there that will be going right through these equities, trying to figure out who actually will get more money into the bottom line with the corporate tax cut. That's what it really comes down to, because you can see when we just read that note from Nike, bottom line is that they have an effective tax rate right now of 11.4%. Last year was 2.1%. That's a big number. So bottom line is that what the analysts would be looking for is anything that is an effective tax rate, what they actually pay in taxes over, of course, the 21% or close to 30 as you can get. If we go up and we take a look at GE, now GE, that has been a machine for years saving taxes. GE's problem right now just continues to be there's sellers in that stock. And this is, this is serious business. GE's at 1747 right now. You're down. You broke with volume. And, bottom line, with game on GE is $11.35. That is the high of the low of 2009. while watching this thing shake out. You stay right there. Our man, Mr. Andy Heck, is going to be coming up next, folks. And, of course, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks. Visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need's right inside you. Have a blast with it, folks. Look forward to speaking right back here at 9 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.